Hello to everyone. So just going to do a preview now ahead of the headline event for this week. So that's the ECB press conference and rate decision. And just as a recap, the last press conference out of the President Draghi did say that they would restart the bond buying programme. It would be targeting towards the shorter end of the curve. However, they wouldn't start buying until a sovereign nation had requested financial assistance first. So there was conditionality attached to these bond buys. So out of this month's press conference, we are looking for details out of Draghi. There has been a lot of source comments on the back of this, particularly on Wednesday's session. So there were sources who did note that the ECB would not have preferred creditor status. So this means that it would boost investor appetite for Spanish and Italian paper if those were the bonds that the ECB bought. Also said the ECB would continue to sterilise bond buys. That's in fitting with the original programme, and this is within the ECB's mandate. At the moment, the ECB cannot buy bonds that are unsterilised, as it falls outside of the ECB's current mandate. As well as that, we have seen reports over the past few weeks that the ECB would target specific yields. However, this has been declined by several officials, and actually sources today saying that the ECB would not do this. Another proposed plan was they would target particular yield spreads against the German benchmark 10-year bond. Again, sources did note today that the ECB would not do this, so it'd be interesting to see that. It's likely that Draghi will outline that bond buys will be in maturities ranging from up to 3 years, so the shorter end. Apparently, Draghi did tell lawmakers in the Parliament on Monday that this would be the case. So it'll be interesting to see this. We did also see today that Merkel said she's still opposed to unlimited bond buys, so again this seems unlikely. Apart from that, however, firstly, we do have the interest rate out of the ECB, so current consensus is pretty mixed. It's roughly 50-50, so half of those going for a cut of 25 basis points to the main reference rate, which currently sits at 0.75, so that would take it to 0.5%. Interestingly, though, there will be a lot of focus on the corridor, so the deposit rate currently sits flat at 0. Not so many expecting that to fall into negative territory. That would be minus 0.25%, in which case we would see a narrowing of the corridor if that keeps at 0%. It'd be interesting to see if there's a change to the lending rate, that currently at 1.5%. If there was a cut to the rate, we could see some weakness in the euro currency, could see quite a bit of volatility in terms of Euribor and across the strip. But that will be keenly in focus first, and then we'll move on to the Draghi press conference at 1:30 London time. So it could be pretty volatile, heavy volumes, a lot of details expected to come out. Draghi also expected to detail the conditionality, so how states will have to seek aid. Again, this will be keenly in focus. So the main points there, if there will be any yield targeting, spread targeting, what sort of maturities they will be in, if the ECB has a preferred creditor status, and also that key benchmark rate. So again, interest rate 12:45 London time on Thursday. The press conference 45 minutes later at 1:30, and then a bit later on we have quite a lot of speakers. We do have Merkel meeting with the Spanish PM Rajoy. For the time being though, that's enough from me. Good luck with the ECB press conference. Looks to be pretty interesting, but for the time being, thank you.